The U.S. Federal Reserve has been in tightening mode since last year, but this month it's decided to keep its benchmark interest rate unchanged. It's also upgraded its view of the U.S. economy to strong. Seung-jae reports.
After a two-day meeting of the Federal Open Market Committee, the U.S. Federal Reserve held its benchmark interest rate unchanged on Wednesday, reaffirming its plans to continue raising borrowing costs at a gradual pace. The Fed, as widely expected for weeks, voted unanimously to keep the rate at a target range of between 1.75% and 2%. In a written statement after their two-day meeting, the Fed said the interest rate was left unchanged due to the economic activity growing at a strong rate. An advanced estimate of gross domestic product for the second quarter released last Friday showed that the economy is growing at an annual rate of 4.1%, the fastest rate in nearly 4 years. Back in June, the Fed raised its target rate by 0.25 percentage points, the second such hike this year and the fifth since March 2017. The Fed policymakers also forecast 2 more hikes this year, and investors are expecting the next hike to happen after the Fed's next meeting in September. According to Bloomberg, there's a 92% probability that it will raise the Fed funds rate to a range of 2% to 2.25%. All signs point to continued small increases in the Federal Reserve's still historically low short-term interest rate. This comes as policymakers reiterated on Wednesday that further gradual increases in the rate would be consistent with sustaining economic growth while keeping the labor market strong and inflation near the central bank's 2% annual target. Seung-jae, Arirang News.